All right, what's good? It's your boy E coming at you with another one real quick. Just thought I'd need to touch base with you guys regarding today's FOMC meeting and the rate hikes. Today they raised rates to the highest level since 2008 and basically said there's more pain on the way, meaning a lot more rate hikes on the way. It's going to get pretty serious. Basically said that rate hikes will have to be restrictive for a lot longer. And that basically means that the chance for a soft landing is pretty much zero. And really quick, I just want to break down what they said in the meeting today and what that means for us moving forward. I believe they said that if you're in any kind of asset class, especially the stock market and or real estate, you're going to see significant reductions in value. Now listen, I don't like to get on here and just be giving you bad news all the time, like bearish news and all that. But I do have to keep it real. Like I said, I love to jump on and be giving you good news, bullish news all the time. But like I said, it's important to keep it real because guess what? When you keep it real, you have the information to go ahead and plan accordingly. You feel me? Chairman Powell has taken his strongest stance against inflation that he basically has throughout this whole cycle. So basically he's gone full hawkish, like a hawk circling around up in the air, waiting to swoop down like a bird of prey hawkish, circling around up there, basically ready to swoop down and attack all investments. Like, like long-term portfolio investments, stock investments, real estate investments, basically everything. I posted something earlier suggesting the fact that they would have to reset the housing market. And basically when he was asked so during the meeting, he was asked exactly what he meant. And he said that the housing market is out of balance and basically needs a correction. And we all know a correction is at least 20% or more. So we can at least expect a 20% reduction. Now, usually the chairman errs on the side of being dovish, but I guess they figured out that the problem is way worse than originally thought. So now he's coming out and basically erring more on the side of hawkishness, and the markets really didn't know how to react. As you can see from the chart here, when they announced the rate hike, the markets originally sold off, then it bounced up, ran back up, then sold off again. So basically my thesis was correct, and I made money on the way down and on the way back up. Now at that point, I didn't want to start giving money back to the markets, but if you look at the chart, I could have made money on the way back down again. But again, every time I get too greedy, I start losing money. Now here's the dot plot where FOMC participants said interest rates would be moving forward. Now, when we were having that bear market rally that I've been talking about, this is where everyone was expecting interest rates to be prior to the meeting today. And as you can see, they basically thought interest rates would go up, but then would basically go straight down. And that's basically why everyone was buying the dip all summer. Now, as you can see, rates are expected to go up into 2023 and 2024, damn near at 5%, and then maybe are expected to start going down maybe by the end of 2024 into 2025, maybe in the longer time frame, and by 2026 maybe we can get down to 2.5%, maybe 2%. So basically we're talking about way out there, 2025, 2026. Wow. So there's no pivot coming according to FOMC participants, and that's kind of a big deal. You're basically talking about years out. This plot basically says at least 2 more years of restrictive policy, and then basically after that, a few more years of restrictive policy. I went ahead and took some notes, and here's a good one. Powell out-hawked the hawks. Ooh. Like I was saying earlier, Chairman Powell was asked specifically about the housing market, and he basically said that the housing market has gotten out of balance and basically needs to go through a correction. And just to give you a definition of what a correction is at least 20% to the downside. So 20% down. So you can imagine the impact to investors on Wall Street that have accrued massive amounts of leverage on real estate and or individual investors and homeowners that may have bought at the top. And some new banks are offering 0% home loans right now, basically while we're at the top, which is basically predatory. In other words, that's basically a setup. That's kind of like chasing a stock when it's run up all the way up to the top and only for it to sell off. That's basically the analogy when I say that some new banks are offering 0% home loans right now while everything's at the top and it's about to sell off. That's why I call that predatory. But again, what I wanted to stress is that when Chairman Powell says that the market needs to see a correction, again, a correction means 20%, and that's at least 20% to the downside. Now, Powell was asked about the amount of pain that we would be expecting. And on one of my tweets or posts, I mentioned the word pain, or mentioned that he mentioned the word pain. He basically said he doesn't know how much pain we can expect, but we can expect to feel pain until we get inflation down to around 2%. And looking at the dot chart, that looks like that's somewhere all the way out in 2024, out that far somewhere at least. And this is very, very hawkish. Like I said, it's like a apex predator hawk circling around up there, ready to swoop down like a darn eagle, like an apex predator up there, ready to swoop down and get us. Now, again, we can see a downtick in inflation for a few quarters, but let's understand that right now we're nowhere near 2%. All right. And we're still going up. So again, that's why I was focused on the word pain. Now, will they pivot? Like if we're in a major recession or a depression or something like that next year? Yeah, probably they will pivot if things get that bad. But basically what they're saying right now is we're going to fight this thing head on and get inflation to where it needs to be, which again is around 2.5%, 2%. So yeah, it's going to be painful for everyone, but again, it's the only way for us to come out of this. Anyway, it's your boy E, just trying to give you guys an update on what happened in the markets today and basically what happened and what it meant for us moving forward. Again, if you like content like this, don't forget to like and subscribe. Again, I will be getting more content up. I've just been super busy in the markets, kind of doing my due diligence and trading, and haven't had time to really get content up. Again, if you guys want that daily morning briefing and or watch list, don't forget to click on the link, go sign up for that, and meet me in my Discord. Peace out.